Could Trump's tariffs on China have a devastating impact on the US economy? Who will win the escalating trade war? The US and China are on the brink of a full-scale trade war. US President Donald Trump is now imposing tariffs of 145% on most Chinese imports. Beijing has responded with 125% tariffs on American products coming into China. Trump says he is increasing tariffs on Chinese goods to 145% due to China having a lack of respect by continuing to increase tariffs on US imports. He has also accused China of ripping off the USA. Beijing then retaliated with 125% tariffs on US imports. China is refusing to back down and said it would fight to the end if the US insists on provoking a tariff war or trade war. China has also said that it will not be intimidated by Trump and accused the US of bullying. According to the World Trade Organization, trade between the US and China could fall by 80% or $466 billion due to Trump's tariffs. China is the second largest economy in the world with a GDP of $19.53 trillion. It is also the world's second richest country. China is the world's largest economy when measured by purchasing power parity. In terms of PPP GDP, China has a larger economy than the United States. China leads with $33.1 trillion, followed by the United States with $30.34 trillion. Estimates suggest that over 70 to 80% of everyday consumer goods worldwide are manufactured in China. China's manufacturing sector accounted for 29% of global manufacturing output in 2023, making it the world's largest manufacturing powerhouse. China produces a large share of global output for various goods, including 50% of cameras, 30% of air conditioners and televisions, 25% of washing machines, and 20% of refrigerators. About 80% of China's exports are manufactured goods, including textiles, electronic equipment, toys, DVD players, mobile phones, shoes, clothes, food products, seafood, body, jewelry, and kitchenware. A significant percentage of products sold on Amazon are made in China, with some estimates exceeding 70%. China also produces 60% of the world's electric cars and 80% of electric car batteries. You may be wondering why so many products are made in China. China's dominance in manufacturing is attributed to factors such as cost efficiency, well-established supply chains, and a skilled workforce. China is the second largest exporter of goods into the United States, sending nearly $439 billion worth of products into the country in 2024. It accounts for roughly 14% of all US imports. Some of the major products imported from China include electronics. This includes smartphones, computers, televisions, and other consumer electronics. Machinery. Various types of machinery and equipment, including industrial machinery and tools. Furniture. A significant amount of household and office furniture is imported from China. Toys and games. Many toys, games, and sporting goods are manufactured in China. Clothing and textiles. A large portion of apparel, footwear, and textiles comes from China. Automotive parts. Components and parts for vehicles are commonly imported from China. Plastics and plastic products. Various plastic materials and products are included in imports. Metals and metal products. This includes steel, aluminium, and other metal goods. Chemicals. Various chemical products, including pharmaceuticals and industrial chemicals. Household goods. Items such as kitchenware, appliances, and cleaning products. Trump's tariffs on China could arguably be the biggest ever shock to the global trading system. Many experts fear that tariffs could cause a recession. They have warned that the US economy may collapse as a result of Trump's tariffs. Trump has already created chaos on global stock markets. The potential effects include increased costs for consumers. Tariffs on Chinese goods may lead to higher prices for consumers. Many everyday products, from electronics to clothing, are affected, which can reduce disposable income and consumer spending. Supply chain disruptions. US companies that rely on Chinese imports for their supply chains may face increased costs and disruptions. This can lead to higher production costs and potentially lower profit margins for businesses. Retaliation from China. China has responded to US tariffs with its own tariffs on American goods, which can hurt US exporters and industries reliant on the Chinese market, such as agriculture and manufacturing. Impact on economic growth. The combination of higher consumer prices, increased costs for businesses, and reduced exports can slow economic growth. Some studies have suggested that the tariffs could lead to a decrease in GDP growth. Job market effects. While some sectors may benefit from tariffs, e.g. domestic manufacturers, others may suffer, leading to job losses in industries that rely on imports or export to China. Trump's tariffs could therefore increase unemployment. Investment decisions. Uncertainty surrounding tariffs can affect business investment decisions. Companies may delay or reduce investments due to concerns about future trade policies and market conditions. Domestic industries. Tariffs are intended to protect domestic industries from foreign competition. In some cases, this can lead to short-term benefits for specific sectors such as steel and aluminium. However, these benefits can be offset by higher input costs for industries that rely on imported materials. Higher inflation. The tariffs can contribute to inflation as higher costs for imported goods are often passed on to consumers. This can complicate monetary policy and affect interest rates. In conclusion, Trump is making a huge mistake by imposing tariffs on China. Trump's trade war with China will have implications for both the US and the global economy. Thank you for watching. If you enjoy watching my videos, then please be sure to like and subscribe.